All right. Well, let's get started. Let me ask you guys, I guess for starters, as far as life insurance, how many of you guys have life insurance already? Do any of you guys?
I do.
Do you? Do you know what type you have?
I think it's term.
Well, let me ask a different question. Do any of you guys know what the company provides you for life insurance? Because the company does have some life insurance.
1 times your salary or something?
I believe that's right. So right now, if you were to, if something were to happen to you today, your company has a benefit that would pay you 1 time your salary. Now the nice thing about that is they provide that. The challenge with that is if you leave here in the future, that life insurance doesn't go with you. That stays here. So with life insurance today, there's different types of life insurance. All right, and people elect life insurance for a lot of different reasons. Let me ask you guys, what are some of the reasons you would consider having life insurance for?
For kids, I guess?
Kids. That's a good reason. The number one reason people elect to have life insurance is to replace income. So if something were to happen to any of us today, and all of a sudden tomorrow our income is gone, life insurance would be there to step in and make sure that there's still income, there's still benefits to help cover the things that your income is covering today. So people elect life insurance to cover things like their income, future education expenses, a mortgage, even to cover things like burial expenses and even debt. So with this, one of the nice things about Aflac's life insurance today, for those of you that have gone out and gotten your own life insurance, this is a very simple, easy means to pick up life insurance. All right, so for those of you that have gone out and gotten it on your own, you know that typically you need things like blood work or parameds, a nurse. When I got my life insurance years ago, a nurse had to come out to my house, they did blood work, they put me on a scale, they did family history. So with this, instead of all that, there's 5 health questions. But as far as the different types, there's 2 basic types of life insurance. There's what's called whole life and term life. Okay, whole life is permanent. It's designed to give you life insurance that, starting out today with a certain premium based on your age, your gender, whether or not you smoke, that premium stays fixed for the life of your policy. At the same time, as you pay the premiums over time, you build a cash value. And what's nice about that is within the policy, that's money that's growing based on a fixed interest rate. It means down the road, if you choose to, you can take that money out, you can borrow against it, you can use it to pay future premiums. The downside to it is it tends to be much more expensive than the alternative. Okay, term coverage is the alternative. And generally people elect term coverage to help when they consider certain things that they have responsibilities for today that might not be there in the future. Things like a mortgage, kids that may hopefully grow up someday and be out on their own. So a term policy is a little bit different. And like it sounds, it's life insurance that's available for a period of time. So within this, if you take a look at this, what you're going to see is the options give you the choice between a 10-year term, a 20-year term, and a 30-year term. All right, so for myself, if I elected a 30-year term today, at 31, the rate's going to be based on my age. And what that means from there going forward, the rate will stay the same. It'll stay fixed for 30 years until 61. All right, the downside to term coverage is at 61, the cost goes way up because I'm now rated as a 61-year-old, and the cost tends to be prohibitive. And what you don't hear oftentimes about term coverage is insurance companies tend to make a lot of money because people don't pass away within their term. So the upside to term coverage, though, is it's much less expensive. So today at 31, I know that my mortgage will more than likely be paid. My kids more than likely will be out of the house and on their own. So I probably won't need the same amount of life insurance in the future. So now one option that's in between here that I think is a nice hybrid and kind of a combination of the two is a return of premium. And what that means is if you did elect that 30-year term or even a 20-year term, and now you have paid over 30 years, and let's say I've paid $10 a week, and it's $500 a year, and I've done that for 30 years, and that's roughly $15,000. I get to the end of that period of time, and Aflac is actually going to cut me a check for $15,000. So that's kind of an in-between that's a little bit more expensive than the basic term and much less expensive than the whole life. But I think other than that, this has a very simple plan design. If you choose to, you can cover kids, you can cover your spouse. There's what's called an accidental death benefit. So you can elect as little as $10,000 of coverage or as much as $200,000. And by having that accidental death benefit, if death were to result from an accident, it doubles the amount of your life insurance. So if I had a $200,000 policy, I die in an accident, the policy, Aflac would then pay me $400,000 or would pay my beneficiary. Any questions on this?
Sounds good to me. Sign me up.